Let's talk about Nvidia, okay? Your read on the quarter, which was, obviously a beat, sales up 94% year on year. That is a slowdown from the prior 3 quarters, which have just been astounding, and 94% up year over year is amazing, obviously. But what's your take?
I mean, let's say at the start, it's down a little bit today because expectations were sky high. But this was a blockbuster quarter by Nvidia. Right. What's clear to me now, and what I think the biggest takeaway from the call, is that the world runs on Nvidia. As Jensen said, AI is in full swing. He said this is a multi-year event. This is not just about training AI. This is about moving all the world's x86 architecture. All the applications that run on CPUs are going to be rebuilt over the course of the next 3 or 4 years on GPUs that are running machine learning. So I think that the market is going to have to digest that this just isn't about training clusters in 2025. This is about GPU data centers that are going to be built in 26, in 27. And so for us, our numbers came up. You saw that I think 10 sell-side analysts took up their price targets for the stock. We were buying it pre-market when it was down.
Oh, you're buying it this morning?
Yeah. So, I think it was a blockbuster report. And I think, it's clear to me that the Intels of the world are going to continue to lose share, and the Nvidias of the world are going to continue to gain share. And if you want to bet on the tailwinds associated with AI, you have to have Nvidia in your portfolio.
Okay, so
the S&P 500 market is up almost 0.1%. This indicates that the S&P 500, which represents the market as a whole, is growing at a very slow rate of about 0.25%. This figure might be used by Gerstner to draw attention to a time of slowness or market consolidation that contrasts with the volatility or rapid expansion observed in particular businesses, such as Nvidia. Despite a slowdown from previous quarters, Nvidia's impressive performance shows that sales are growing year over year. Although Gerstner admits that Nvidia's sales have risen since the same time last year, the growth has slowed in comparison to the company's remarkable 94% growth in the previous 3 quarters. This implies that although Nvidia is still expanding, its growth rate has slowed, as may be anticipated following an early spike in demand, such as that caused by trends in AI or other products. "94% more innovations in a year is incredible." Gerstner draws attention to Nvidia's remarkable growth rate from previous quarters. This probably alludes to the business's impressive results, which are driven by its dominance in fields like AI chips, data centers, and gaming GPUs. The market should be mindful of the possibility of a slowdown even though Nvidia is still in a strong position because of the remarkable growth that was previously observed, which moderated from 94% to something lower. Doesn't necessarily indicate that the business is having trouble, but it can indicate that the growth stage is shifting into a longer-term trajectory that is more sustainable. In the short term, Gerstner appears to be providing a nuanced analysis of Nvidia's performance. Indeed, a slowdown has occurred, but it's crucial to remember that the company has experienced exceptionally strong growth over the last year or so, and that even slower growth could still be a good result for the business, particularly when compared to the state of the market as a whole. Gerstner is admitting that Nvidia's stock or performance may have suffered because investor expectations were set very high before the results were revealed. Despite a blockbuster quarter with excellent financial performance, the stock may have dropped because it failed to live up to the extremely high expectations of investors. When expectations are that high, even exceptional performance can occasionally bring disappointment if it doesn't transcend what people had hoped for. Nvidia's recent financial reports were very impressive, despite any unfavorable reaction in the stock price. Mind says that this was a blockbuster quarter for the firm, which suggests that it performed exceptionally well in terms of revenue, profitability, or other important criteria. The most important lesson I've learned so far is that Nvidia powers the globe. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
What was your take on the quarter? You obviously well known for being in this stock for a very long period of time.
I think they were very artful in the way they maintained everyone's enthusiasm for the potential for Blackwell, where orders stand, the fact that demand is still outstripping supply, but they didn't ratchet up the excitement too much to put them into a position where they just can't win the next time they report. And that's really going to be the company's job going forward. It is already the largest market cap company in the world. It is already the most must-own stock in the world. There is no need to continue to put pressure on themselves to outperform and outperform and outperform. So it's harder than it sounds because they do have a really bright future. And the revolution is real. And the dominance of GPUs and data centers going forward is undeniable. And their market share position within that revolution is also undeniable. So they have to now do this quarter after quarter, give people realistic guidance, execute, ship products, hit those numbers, but not paint themselves into a corner that they can't escape from, where the market expects them to double revenue every year, which, of course, like mathematically will be impossible. So far, so good. I think Jensen understands the mission. I think he's accepted the mission, and I liked everything I heard last night. The most important thing, and I'd love to hear Brad react to this, is this idea of the moat, because competitors are coming in with new solutions. Amazon is ramping up production of their own Trainium 2 chips. Like, they will not have the whole markets themselves forever, but they can maintain dominance, and it might actually be a good thing for the ecosystem for there to be more products out there. I think that's the tone that was set last night, and I think other NVIDIA longs heard the same thing that I heard.
The phrase, "the world runs on Nvidia," probably alludes to the company's role in supplying the hardware, particularly graphics and computing units, GPUs, that power everything from gaming to AI research and cloud computing, as Jensen stated. Gerstner is emphasizing how important Nvidia has become in the modern tech landscape, solidifying its position as a dominant player in the tech world, particularly in areas like artificial intelligence, AI. This relates to Nvidia CEO Jensen Huang, who has often talked about the growing significance of AI. Gerstner is restating Huang's assertion that AI is not merely a passing fad or a possible future technology, but is already a powerful force that is well underway. This shift is not limited to just training AI, which usually entails using massive computational power to teach AI models. Gerstner is arguing that the impact of AI will be felt over a number of years rather than being a short-term phenomenon. The breadth is far more expansive. In essence, Gerstner is stating that although Nvidia's stock may have underperformed in comparison to extremely high expectations, the company's underlying performance is excellent, and the larger takeaway is that Nvidia has become central to the development and deployment of AI technologies. AI will play a critical role across industries, and Nvidia's technologies will be integral in and supporting this AI revolution in the long term. Nvidia is at the center of this transition, which is a multi-year process that involves far more than merely building AI models. Nvidia versus Intel. Gerstner is pointing to a trend in which he thinks Nvidia, a leader in graphics processing units, or GPUs, which are essential for artificial intelligence and high performance, will continue to gain market share while Intel, a legacy semiconductor company, will continue to lose market share. The market share of computing will continue to increase. He is stressing that one of the main factors for this change is the rise in demand for artificial intelligence. Products from Nvidia are especially well suited for AI applications. When he says, "You are buying this morning," he may be referring to the state of the market, suggesting that even though stock prices may be lower right now, he thinks it's a good time to purchase stocks related to AI-driven companies like Nvidia that stand to gain from these tailwinds, or products like hardware visual assistants. Meanwhile, as AI technologies grow, companies like Nvidia stand to benefit, while Intel's products are perceived as being less well-positioned to take advantage of the AI boom. In essence, Gerstner is saying that if you want to wager on the development of AI in the future, you should concentrate on firms like Nvidia that are expected to rule the market. You must include Nvidia in your portfolio even though Intel and other traditional chip companies might find it difficult to compete. Given the company's dominant position in artificial intelligence, AI, and other advanced technologies like semiconductors and GPUs, Gerstner strongly advises that investors should own Nvidia stock. He thinks that exposure to Nvidia is essential for potential growth and that investors should buy a little more this morning. He suggests that Nvidia should be the second largest position in an investor's portfolio and that investors should consider adding more to their holdings if the opportunity arises. This suggests confidence in Nvidia's future prospects. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
All about the idea of the installed base, and we've heard Jensen talk about that before, almost in the same way, and I think I've mentioned this in the past, of thinking about that in the same regard as we do Apple with its own sort of powerful installed base.
Yeah, I mean, listen, the stock started the year at $49 a share, $50 a share. Today we're at $145 or something. The asymmetry is closed, and part of the reason for that is everybody had this wall of worry, right? Custom ASICs, Amazon's going to have their own Trainium chip. I said on our recent BG2 podcast, of course they're going to use Trainium. It's a cheaper price solution for certain customers, but they also, Jassy has said he's going to buy as much Nvidia as he can get his hands on for as far as the eye can see. They know the world runs on Nvidia. So, listen, when we look at our price target for Nvidia next year, it's up 30%, not up 100% like it was at the start of 2023 or at the start of 2024. So when you ask me as a portfolio manager, we took down the size of our position. It was a really outlier position for us to start the year. It was a normal normal-sized position for us coming into this quarter, and we're adding a little on the pullback in this quarter. But we think it's going to be a great compounder and a great bet on not only AI, but also on the replacement, the move from x86 to GPU-based data centers for the next several years.
Okay.
Josh's viewpoint on Nvidia, particularly in light of the market circumstances at the moment. The comment regarding Josh emphasizes that he is well known for being a long-term investor in Nvidia. This could be a reference to Josh Brown or another market analyst who has long supported Nvidia. The point here may be that Josh consistently maintains a bullish position on the stock and was very artistic in how they kept everyone excited about the potential for Blackwell. This is probably a reference to Nvidia's strategic communications and product developments, particularly around their Blackwell architecture, which could be a crucial component of their future growth. Depending on the situation, Artful suggests that Nvidia has been adept at generating enthusiasm and assurance about its technological developments, which has kept analysts and investors upbeat about the company's potential for expansion. It appears that Gerstner and Josh think Nvidia is still a great choice for investors and that the company has done a good job of keeping them excited about its future, especially with innovations like Blackwell. This shows that they think Nvidia is a solid long-term investment, especially when considering emerging technologies like AI install base. One important measure is the install base, which is the total number of active users, devices, or clients that a business has. In tech organizations where the customer base is viewed as a basis for future growth, even though short-term earnings may not be as high, this approach is frequently employed since a large and expanding install base can produce long-term value and income potential, similar to Apple. The main conclusion here is that as the number of customers or the install base grew, the symmetry has closed. Gerstner compares this concept of the install base to the trajectory of Apple, pointing out that the stock price of Apple began at about $49 or $50 per share and gradually increased to $145 per share. In the early phases of growth, there may be a great deal of uncertainty and an imbalance between risk and reward. This phrase describes the narrowing gap between a company's current worth and its possible future value. In other words, as a company's install base expands and its risk-reward imbalance gets more established, the likelihood of a significant payout versus the chance of failure over time closes or narrows. This implies that the stock price of the company has improved in accordance with its steady, mature growth. In brief, Prospect is comparing Apple's journey when the business was trading at $49 or $50 per share to the idea that a company's value often increases as its install base develops. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
You've been a holder of this stock for a long time, too.
Yeah, I mean, I think what's so amazing, and you talked about this moat, and what this means for the AMDs of the world, et cetera, is Jensen walked through how 64 Blackwell GPUs can run GPT-3 compared to 256 H200s. So they're even making chips, the Blackwell, it's not a chip, they're making these GPUs that are cannibalizing their own products. And this is why they are so hard to compete with, is they just continue to innovate so quickly. And then when he talks about how Oracle is announced this Zetascale, whatever that is, AI cloud cluster, that can handle over 130,000, Blackwell GPUs. And so I think when Brad talks about this shift going from modernizing from CPUs to GPUs, I don't think we are really great about understanding. Jensen thinks it's $1 trillion over the next 10 years. I mean, the difference between a billion and a trillion, a billion seconds is 32 years. A trillion seconds is 32,000 years. I think we are still early in this, and this moat is going to last for a very long time. But I do think there are going to be big winners and big losers. And right now, Nvidia is the winner of the bunch.
And Liz, I mean, obviously the market's still trying to digest it. If there was any bit of, I don't even want to use the word disappointment. I mean, there's just so much to live up to. As we said, we had 11 or 12 price target increases on the name. I only see one firm talking about their guidance being below what they would suggest is the bull case. I mean, as you watch the market here react to it, what do you think?
Well, I think the most important points that have been made so far are that expectations were so high. Brad said that at the beginning of the show. And then Josh about making sure that they can set realistic expectations going forward. This market is hard to impress on stock price action. I mean, we're talking about situations where you've got beats and raises being punished in the stock price. So first of all, I think we're still in the infancy of this AI theme. We're going to be in the infancy of it for a little while yet. But as it matures, what we're going to find out is whether or not the companies that have been the winners so far can continue to win along that vein. And then who are the other ones that will come in, and even the other industry groups that will come in. And something that's been really interesting to me in the last month or so is just the performance of software. And I think some of that has to do with the fact that, okay, we've established that this thesis will continue going forward with AI. What else can companies start to spend on? Where can they actually find the profit? And who are the companies that are going to help them create that profit? And I think software is a big group that's going to benefit from that going forward.
Its stock may have been cheap compared to its potential for growth, but now that its install base has grown and its possibilities are more obvious, the gap between price and value has shrunk. The phrase, "everyone had this wall of worry," refers to a broad feeling of skepticism or anxiety about a specific company or market, with people being unsure or concerned about its prospects for the future. The term, wall of worry, is frequently used to characterize the psychological barrier that investors encounter when there is general skepticism about a stock or market. But it can also suggest that opportunities still exist and that they will use training because it is a less expensive option for some clients. Here, Gerstner might be discussing a business strategy that includes training, possibly as a means of reducing costs for specific clients. This implies that the company is implementing a cost-effective solution that could draw in more business or improve profit margins, especially in a market that is competitive or price-sensitive. The price target for next year is up 30%. This prognosis indicates that, despite the wall of fear, Gerstner sees tremendous growth potential for the firm or asset in question, with the price of a stock or the valuation of a company anticipated to rise by 30% in the upcoming year. Gerstner appears to be stating that, in spite of the general skepticism or worries, he thinks the company is setting itself up for future growth. They are putting cost-effective strategies like training into place to draw in more clients, and he is certain that the stock price will increase by 30% in the near future. The initial position size was thought to be an outlier in terms of size at the beginning of 2023 or early 2024, which implies that the investment was initially a larger, more significant stake than would normally be held. As the year went on, the position was adjusted to a normal size for the current quarter. This most likely indicates that the company reduced its investment because the stock had undergone a substantial increase in value, or because they wished to lower risk or preserve diversification by adding a pullback. Price: the company is utilizing the chance to reinsert itself in the role. A retreat is frequently interpreted as a chance to purchase shares at a discount, particularly if the investor is still optimistic about the possibilities for long-term growth.